If you've been thinking about using rental income that you don't even have coming in yet to buy a home, this video is for you. You see, FHA has this little known rule that says you can actually use future rent from the property that you're buying to qualify for the mortgage. You don't need landlord experience, and the home doesn't even need to be currently rented. This can be a really smart way to qualify for a home more easily and get someone else to cover your part of the payment. But FHA has specific rules on how rental income can be counted, and understanding those guidelines can make or break your approval. Let's walk through how FHA views rental income, what documentation that you're going to need, and how much of that income actually counts towards your qualification. FHA does allow mortgage borrowers to use rental income to qualify, but only if you meet certain requirements. The goal is to make sure the income is reliable, verifiable, and likely to continue. First of all, the property must be one of the following: either a 2, 3, or 4 unit home, or a single family residence with a legal accessory dwelling unit, or ADU, on the property. From there, the guidelines depend on whether the income is coming from an existing tenant or a future tenant in a property that you don't live in just yet. If the property already has tenants with leases in place, FHA may allow you to use that income as part of your qualifying numbers. You will typically need to show a current lease agreement, evidence of receipt, such as bank statements or deposit history, and a rent schedule from the appraiser. In most cases, FHA will count 75% of the verified rent. The remaining 25%, well, that's treated as a vacancy and maintenance buffer. Now here's the really sweet thing about FHA. You can use projected rents from a 2, 3, or 4 unit property to qualify for your loan before it's even rented. To use future rental income, you will need a fair market rent estimate from the appraiser, also known as Form 1025, and proof that you will occupy 1 unit as your primary residence. But here's a gotcha. If the home has 3 or 4 units, FHA requires what's called a self-sufficiency test. That shows that the home's rental income can support the payment. Honestly, most triplexes and fourplexes, they're just not going to pass the test. Look for a duplex or a single family home with an ADU for easier approval. Just like with existing rents, FHA typically allows 75% of the projected rental income to count toward your qualification. This can significantly increase your buying power and make multi-unit properties more affordable. And hey, if you're finding this video helpful, hit like, subscribe, and tap that notification bell. That way you don't miss any future updates. FHA also allows the use of rental income from an ADU in certain situations. The requirements are similar. It must be a legal ADU and meet local zoning codes. It must have its own entrance, bathroom, kitchen, and other amenities that you'd expect in a typical apartment. An appraiser must provide a fair market rent estimate, and FHA, once again, counts 75% of that projected income. This can be a great option for buyers that are looking to purchase a home with a separate guest suite, a basement apartment, or similar space. There are a few limitations that you should keep in mind. You cannot use short-term rental income such as Airbnb, in your qualification. You cannot use rental income from a single unit property unless there's an ADU, and you can't rent out all of the units. You're going to have to live in one. FHA is focused on owner-occupancy and long-term stable rental income. Because rental income can vary, FHA wants strong documentation. You should expect to provide items like lease agreements, bank statements, tax returns, and possibly more. But the more complete your paperwork is, the smoother your process is going to be. So here are some final thoughts. FHA rental income guidelines are designed to help buyers qualify responsibly while still giving them the flexibility to purchase multi-unit properties or homes with ADUs. If you plan to use rental income to qualify, understanding the 75% rule, documentation requirements, and occupancy rule is key. Done correctly, rental income can boost your buying power and open the door to house hacking opportunities. For more FHA insights and mortgage tips, visit mortgageresearch.com. If you have questions, drop them in the comments below. We are always here to help. Thanks so much for watching, and here's to making smart moves with FHA financing.